Analysis of Chinese markets. According to International Monetary Fund, since Chinese economic reform, China was the fastest growing major economy with growth rates averaging 10% over 30 years until 2015. Moreover, China is the world's largest manufacturing economy and exporter of goods. It has exported approximately $2,096.16 billion in 2016. The People's Republic of China is mainly exports smartphone, computers, and textile as well as industrial machine tool equipment. The annual meeting of the Communist Party-run legislature was held. The party made a bombshell announcement about ending the constitutional term limit on the presidency. Therefore, President Xi has held on power in long term. Under President Xi's leadership, we predict the Chinese government will keep using the current foreign economic strategies and the policies to related trading partners, and the regions should not have any significant changes in next decade. China's current account surplus widened to $62.2 billion in the fourth quarter of 2017. A preliminary estimate showed the country will run a current account surplus and will be a net lender to the rest of the world. According to the data, China is a net saver. The market currency is considered undervalued. The Big Mac index of China is $3.2 and $5.3 for USA. In 2018, Chinese yuan has been undervalued by most 40%. China is at the lower bottom quadrant in Swan diagram. By applying expenditure switching policy, the real exchange rate is likely to increase. Then the policymaker would like to decrease the absorption by applying expenditure changing policy, for instance, decrease the government spending. In terms of exchange rate of yuan and USD are normally stable. China has perfect capital mobility and fixed exchange rate. According to the trend in March, the physical expenditure increased gradually. Combine this information with previous model, a diagram is shown below. In terms of government expenditure increases, the IS curve will shift to right and the relative interest rate rise up, which results that the supply of foreign currency excessively. Moreover, the central bank is likely to purchase more foreign currency and increase money supply. As a result, the ILM curve will shift to right. The trade war between China and USA that happened now is a big event in political concerns impacting the trade. China and USA have decent interest rate gap. Net capital inflows will be resulted. Central Bank of China will enter into dangerous territory by a drying up of inflow and capital outflow.